Okay. All right. I want to welcome everybody to our Forex profits class, where you're going to learn how to scalp $50 to $100 a day minimum. We have people that are being able to scalp $200, $500, $1,000, $2,000 a day in a Forex account. I'm super excited to be your trainer for this session. I do have a master's degree in business, bachelor's in finance, and this is our kickoff session. And it's just to introduce you to the world of Forex and get you mentally ready for where we're going to be going for the next 3 weeks. So let's talk about disclaimer and non-disclosure agreement. I am not a financial advisor. I will not tell you what to invest in or pick stocks or trades for you. This training is for educational purposes only. Please be aware that all trading transactions can result in potential loss. You should only be trading with disposable income and not leverage more than you can afford to lose. Now, the disclosure, this is so important because I really don't like sending out letters from my attorneys, but for some reason I have to say it. Again, this is my business. So this class is in my investment business where people pay me for training and mentoring and things like that. If you are in my econ, you are getting access to this solely because you joined someone on my team in my econ. But again, this is my business. This is my intellectual property. So you cannot discuss, share, reproduce, copy, reprint, modify, rewrite, create, publicly display on social media, publicly perform, license, or sell content retrieved or learned from this course or my presentation slides without the express prior written permission by myself, or I'll have to take legal action. And I shouldn't have to say this, but for some reason I have to. So I just want to make sure that everybody is crystal clear. And once again, to have access to this class, it really is by invitation only. So if you know somebody who is interested, please reach out to me. Now, over the next 4 weeks, you're basically going to learn what Forex is. You're going to learn about my big three that I focus on trading. You're going to learn about market temperature. You're going to learn how to identify trends in the marketplace. You're going to understand resistance and support. You're going to know about risk management. You're going to learn my scalp strategy, which is going to basically give you a set of rules that you're going to use so that you know when to enter a trade and also when to exit a trade and when not to trade. You're also going to get a candlestick training, and we're going to be using the MetaTrader 4 platform and the mobile app. So do not download MetaTrader 5, use MetaTrader 4, because some of the indicators that I am going to be giving you to add to your charting is only available in MetaTrader 4. Now, I know some people may be using different platforms and you may not be using MetaTrader 4. That is fine. You may be using Trader's Way. What I do not know is if Trader Way has all the asset classes that we trade in MetaTrader 4. I do not know that. So I do suggest that most people do use MetaTrader 4 so you can have access to everything, okay? And then, of course, with this course, you have access to my private Facebook members group. Again, that Facebook members group is for people who paid for the course or you came through my econ, which gave you access to the course. Do not add anyone to this group because it's not just an open group on Forex that anybody can come to. You literally had to pay in order to have access to it. I always kickstart my session off with making sure that you understand the 4 ways that you can make money in America. And I always use the example of Robert Kiyosaki and his cash flow quadrants because it really shows the elevation that you need to be having in your finances. But the hidden gem behind this is also it represents the tax code. And so basically everyone, when it comes to making money, we have jobs, okay? So we start in the E quadrant, and that's basically where you're trading time for money. You go to work for 40 hours, you get paid. You get laid off, guess what? You don't get paid. Now, the problem with this is that If your only source of income is coming from a job, you're always on borrowed time because you don't own it, you don't control it, and you can lose it at any time. So you have to have a plan B. Also, within about 15 years, 40% of all jobs will be replaced by AI technology. So if you're not paying attention, they're already testing it out right now. That's why everybody's still working from home. They're able to replace of the
what's the magic word?
the manufacturing things. Many of the manufacturing. Please make sure that you do not unmute your line if you got noise in your background, because I have everybody on mute, so you are unmuting yourself. Please don't do that. Thank you, because I want to keep the call as clear as possible so that everybody can learn and hear clearly. Thank you. Really appreciate it. And so, again, 40% of all jobs are going to be replaced. So you need to be looking for other ways for you to make money, because there's nothing that you're doing that a robot and technology cannot do. So they already got the driverless cars, the driverless trucks. They already got robots that's checking people into hotels. There's robots that's doing cleaning services. There's robots that's in the hospitals. So the time is coming, and you're going to start to see this right before your eyes. And so what happens is we want you to graduate from the E quadrant, and we want you to advance into the S quadrant. And the S quadrant is where you tie a home-based business or just another, it could be a brick and mortar business, to your income. Now, at that level, what you do is you open up additional streams of income that's not necessarily dependent on a job. Now, why do you want to have a home-based business? The tax advantages. And toward the end of this presentation, you'll know why you need to have a home-based business if you don't already have one. And like I said, you're also making it where your income is increased, so you don't have to basically ask your boss for a raise. You can give yourself a raise. Now, once you have a business, you have to elevate your business. So it's not just having a home-based business, you got to take it to another level. And that's where the B quadrant comes into place. You got to figure out a way to convert the business that you have into big business, meaning that you have to create leverage into your business so that all of your money is not tied to your efforts. Okay. So for most people, if you're a hairstylist, what do you want to do? You want to have a salon, you want to get maybe 3 or 4 other stylists, you want to charge them booth rent or something like that so that you can make money even when you're doing hair or when you're not doing hair. And it's no different than franchises. If you think about McDonald's, they have franchises all over the world, and they're using this system so that they can make more money, because you only have so many hours in a day. And so what we're able to do, especially in the MyEcon opportunity, is we're able to create leverage in our businesses by offering our business opportunities so that other people can be financial coaches. And when other people open up their own financial literacy education business, as they're building a business, MyEcon allows us to participate in the profit sharing of the profits that they are earning. So that is allowing us to create residual income. And that's where you want to be. Now, once you build a big business, the next stage is for you to become an investor, because as an investor, you have your money working for you. This is where you are multiplying money. Investors are usually people who are in the real estate game. They are stock investors, and they may have multiple businesses. And usually most people, they go around the E and the S, but they never quite get to the right side. And so what you got to understand is, until you have leverage, and until you have found a way that your money can make babies, you are going to be renting your life. And so the reason why you're here today is because I want to show you how to own your life. And I want to show you how to make money even without you working for it. Because what you got to understand is that 90% of the wealth is owned by the top 10%. And 90% of people work for the top 10%. I don't know anybody who's extremely wealthy that just works a job. They have businesses, and they have leverage, and they are investors. And that's basically where you want to be. Now, the hidden gem behind the 4 quadrants is the tax code, because as an employee, you're taxed at the highest rate, tax rates in America. So you can be taxed up to 34%. But then when you attach a home-based business to your income, you reduce your tax rate and you're somewhere between 22 and 24%. And then as you continue to transition over and you become an investor, your capital gains is taxed between 5 and 15%. So I don't know about you, but I want the lowest tax rates in America, and that's as an investor. So that is where you want to be. That is the progression of finances. And so you got to get out of one quadrant and you got to learn how to master all four of them. Now, one thing that I will tell you is that in order for you to be successful in trading, I am here to tell you that 90% of it is what you think about, your mindset. And 10% is actually about your skill set. And so some things I want you to think about is I want you to think about how you feel about money. Because it matters. You know, if you feel like money is the root of all evil, guess what? You ain't gonna do what you need to do to get enough of it. If you're the type of person like myself who believe that God told me I was supposed to have an abundant life and I was supposed to have access and domain to everything that is here, then I want everything that it is, you know. So it depends on your mindset, because your mindset will determine whether or not money gonna be running to you or if money gonna be running from you. And so if you're the type of person that you start learning the skill set of trading, and then all of a sudden you get frustrated and you give up, guess what? You ain't gonna never make no money. If you're the type of person that think you know everything and you're not willing to listen and learn and be coachable, you ain't gonna make no money, okay? If you are the type of person that is gonna compare your results to somebody else, you're not gonna make no money. But if you're the type of person who believe that, you know what, I may not understand this right now, but I'm going to keep practicing and I'm going to keep learning and I'm going to be disciplined, and I know that I am going to get where I need to get to, you're going to make money in this. If you feel like you have the ability to learn anything because you got an amazing mind, then you're going to do well in this. If you're the type of person that when you lose in your demo account, you use that as a teachable moment, you're going to do well. If you're the type of person that's going to take the time and track all your trades, so you know when you traded, what time you traded, why you traded, what was your mindset when you was trading, was you chasing candles, was you following the strategy? If you're willing to do that much detail and write it down and track it, you will be successful. So you have to ask yourself, what type of mindset? Is it fixed or is it growth? And the only way you're going to be able to win in Forex, win in any type of investment, is going to be a growth mindset. What I'll also tell you is you're going to have to detach your emotions from money, because you're not going to win 100% of the time. There's no such thing. There's nothing that you can do, no indicator you can buy that is going to have you winning your trades 100% of the time. It don't exist. Anybody tell you that, they're a liar. So you have to be able to say, you know what, I'm going to manage my risk. And even when I lose money, I'm going to learn from it, but I'm not going to give up. I'm going to keep going because I know it's going to be greater later. Okay, so I have already failed for you guys. I have already lost money for you guys. So all you have to do is just follow what I'm teaching you, because I got to this point through all my trials, okay? And so what I want everybody to do, especially the new people that are on here today, I want you to write down your vision. What is it that you want? What do you want to get out of this Forex class? And I also want you to write out your money goal. So if you look through this group, you're going to see people who wrote on a piece of paper a big old number. It could be $5,000 a month. It could be $15,000 a month. It could be $20,000 a month. It could be $50,000 a month. I want to know what your number is. So one of your homework assignments is I want you to think about what you want. If your desire is to make it where you don't have to work a job or work for somebody, how much is that? How much is that? I want you to write that down. And I want you to write it on a piece of paper. I want you to take a picture of it. And I want you to post it in our Facebook group. And I want you to post it on your social media. Because what I want you to do is I want you to get some positive energy out there. And what I want you to do is I want you to become attractive. I want you to become attractive. So I want you to put it out there. I want to see what your goals is. Because when you're thinking about giving up, guess what? I'm going to throw it right back in your face. No, 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 no. You told me you don't want to work for nobody. How bad do you want it? So you ain't finna give up. So what's your number? I want to know that. And what I want to do is I just want to talk about the secret to what I call God's promise. You know, because God does have some procedures that you got to follow in order for you to get an abundant life and the blessings that he has for his people who seek him first. Okay. And what that is God said that there is a seed time and then there is a harvest time. So what I'm saying to you is that most people want the harvest, but they don't want to do the work. It does not work that way. And so what you're going to have to do is you're going to have to plant your seed in good soil. Okay. So what is the soil? The soil is this group, your mindset. You're going to have a growth mindset. You know, that's your soil. And you're going to plant your seed. And your seed is going to be your commitment to being on every training, rewatching videos, taking notes, setting up your trading system, taking your practice trades, asking for help. That's your seed. Now, after you plant your seeds, what you got to do, you got to water it. You got to water it. So how you going to water it? You're going to track every trade you take, because this your baby. This Forex has the ability to pay you in a way that you can never imagine. So you got to water it. So it's not just you being here, but you're going to have to do the work. You're going to have to take trades. You're going to have to track your results. And then there's time. There is nowhere where it said you put some seeds in the soil, put some water, and you're going to have your fruit the next day. That doesn't exist. You got to put in the time. Don't compare your ability to learn to anybody else, because there are people in our group that has been here 6 months. There are people in this group who are in other trade classes. There are people in this group who might have been trading Forex for a year or 2 years. So we have different levels of traders in this group. So don't worry about what nobody else do. I just want you to run your race. And so when you mix that seed with that water and some time, you're going to get a harvest. And you're going to get something that nobody can ever take away from you. Now, I want people to get up in this comments box, and I want you to answer this question for me. Would you rather have $1 million today or a penny doubled every day for 30 days? I want somebody to get in the comments box and tell me what their answer is. Get into the comments box. Would you rather have $1 million today or a penny doubled every day for 30 days? Yes, Rachel. Yes, Danielle. Yes, Val. I see you, Marshall. I see you, Stacy and Lisa. Tara. Yes. Candy, Henry. Yes. Yes, yes, yes. Sheila. Yes. Hey, Jesus. Yes. That's what we want. We want a penny every day. Because remember, I talked about you want your money to be having babies. You want to be able to put your money to work, and you want it to be able to multiply. Because a lot of time people are playing addition and subtraction, but ain't nobody playing multiplication. And that's what we're trying to do, because guess what? A penny doubled every day for 30 days is $5.3 million. $5.3 million. And so when you're trading in the Forex markets, what you're doing is allowing yourself to get some compound interest out of this world, better than anything that the bank could ever pay you. So my goal here for this course is basically to help you create your own job. I want you to create income insurance. For many of you who are in My Econ, that's why My Econ was short for My Economy. It's about your finances and how you're able to manage your household. And so what I want you to be able to do is I want you to be able to have recession-proof income. I want you to be able to make money from the comfort of your home. Now, it only takes 1 to 2 hours a day to watch your chart, to take a trade if you see it, in order for you to master your skill level. a small investment of $150 to a trade account so that you can go live. You're going to be able, like I said, to be able to withdraw anywhere from 50 to 100 plus a day from the financial markets. So that could be an extra $1,200 to $2,400 in addition to your paycheck at your job. And all you need is a phone, computer, internet access, and my trade strategy. And I should have added one more: discipline. Discipline. Discipline is going to make or is going to break you. So we are all about finances and Forex right now. And so many times people want to know what's the difference between if they was buying a stock or if they did Forex. Well, when it comes to day trading stock or day trading Forex, we are speculating. And basically all we're doing is we're making money off of the differences in the price values of different asset classes. So when it comes to stock, most people, well, not most people, but majority of the people are buying stock. They own the stock and they're buying it hopefully at a lower price with the hopes that the price of the stock is going to increase. And once the stock price increase, they're going to sell so that they can take their profit. Okay. Now, always remember when it comes to a transaction in the financial markets, there are two people on both sides of the equation. So when you are buying a stock, you're actually buying a stock that somebody else already owns. So it's not a new stock that's circulating. It is somebody who's willing to sell it to you at the price that you're looking for. And when you sell your stock, there has to be somebody on the other side that's willing to buy it from you at your price. Okay, so when it comes to stock, you got to own in order to sell. Now, when it comes to Forex, it's a little bit different because all we're doing is we're taking a position in a currency or an index. If we think the price is going to go up, we're going to go long. And if we think that the price is going to go down, we can short. See, unlike people who invest in stock, they can only make money when the price goes up. In the Forex market, we can make money when the price goes up or if the price goes down. And so I absolutely love this because sometimes, you know how back in March, you know, the stock market took a dive, you know, because number one, the market was already inflated. And then we had the coronavirus that came. And so the markets plummet. Now, the people who have 401ks, obviously they're panicking because they're seeing nothing but red. They're losing money. People like me was absolutely happy because what did I do? I shorted the market. So when the market was falling, I shorted the markets in the Forex and the futures market and made money as it tumbled down. And so you can actually use this as a way to also hedge your retirement account. So your retirement account may take a hit because the stock market dropped, but if you're trading, day trading in other areas, you're going to be able to fill in the gap. And then that way, when the stock market starts to move back up, you got that extra cash flow to buy at bottom basement price and ride it all the way back up, and you never really lost money. And I'm telling you guys, this is one of the secrets to getting to $1 million portfolio in a short period of time. Now, what is Forex? Forex is basically the foreign exchange market. It is one of the most liquid markets in the world. If you look here, about $1.9 trillion retail traders are able to have access to on a daily basis. Even though 6 trillion hits the market every day, retail traders like me and you, we really only have access to 1.9 trillion, not 6 trillion, okay? Then there's also what we call the futures market, where $437 billion hits the futures markets every day, 191 in the equities, and 28 billion alone hit the New York Stock Exchange. Now, everybody who knows me know that we don't just trade in the Forex market. I believe in getting all the money. So I am a Forex trader, futures trader, stock trader. commodities trader, it doesn't matter, because once you learn how to trade, you can literally trade any asset class. So you in the right place at the right time with the right group of people. And so if we think about foreign currencies, I want you to understand that every country has its own currency. So think about it. If you were to go on vacation, and I'm using this example of Mexico. If you went on vacation to Mexico, what you're going to have to do is you're going to have to take your US dollars and you need to convert it into Mexican pesos in order for you to buy anything in Mexico. And so there is an exchange rate that exists. So a dollar, a US dollar, is worth $18.80 in pesos. I'm going to say that again. One US dollar is worth $18.80 in pesos. So obviously that means you go down there with a dollar, you gonna rack up. That means that the US dollar is appreciated because it has a higher value than the pesos, and the pesos is depreciated. And that's all the currencies is. You are going to be pitting one currency of one country against another. And the difference in the prices is what is going to allow you to make some money. Okay, so just understand $220 billion is hitting the markets every single day. So there is no reason why anybody should not be making any money in the Forex markets unless you just are not being taught the right strategies, but there's money to be made every single day. The major players that's in the Forex market. Now, it used to be just government and the big banks. You know, the city banks, the JP Morgan Chases, the Bank of America, those were the major players that was in the foreign markets, okay? Also, many companies do international business. Many different countries buy bonds from other countries. And so obviously the currencies need to be switched over. I want to say more recently, because of technology, because of the access to the internet, the ability for the Forex market to be streamlined, you know, with technology, they opened the door for the little people like me and you, and we are called retail traders. So now we got access to the same cash flow of money as the big wigs. And so you are in a very good space and opportunity because this wasn't available to us. And so you got to understand that how banks make money. Banks don't have money. Banks don't have money. So what they do is they tell you, hey, you don't want to keep your money in your safe at your house. You don't want to keep your money under the bed. What if somebody come into your house and they steal your money? I think that it would be a smart thing for you to allow us to hold your money for you and keep it safe. That's what they told you, right? And then they tell you, hey, you want to always save for a rainy day. So you got to build your emergency fund, and you should build it in a savings account at the bank. So you mosey on down there and you get them $10,000. That's my savings. I'm put it in the bank. And they're going to tell you, hey, just because you are letting us hold and protect your money, we're going to pay you some interest on your money. We're going to pay you a whopping 0.0002 and make you think it's going to be 1%. You ain't getting no 1%, but I'm going to get you close to 1% for allowing us to hold your money. Now, keep in mind, remember, if somebody is paying you interest, that means that you're giving them a loan. So in essence, what you did is they told you that they're going to help you keep your money safe. But what you're doing is you're loaning them your money. And because remember, banks, what's their product? All their products is generated around you giving them more money, right? And so once they get your money and you're loaning them the money, because when you put your money in the bank, it's not there technically, it's there on paper, but it's not there. And so what they do is they take your money that they're paying you 1% on, and then they lend that money to somebody who want a car note, somebody who want a mortgage, charge them 8%, charge them 13%, take some of this money put it in the Forex market, make 200% off of the same money that they're only giving you a 1% on, which is why everybody in my econ, we know better. We don't keep our money in the bank, okay? But you need to understand how banks work. And so they take your money, they go into the foreign exchange markets, and they make more money. That's the game, okay? So the Forex market is available 23 hours a day, 6 days a week. You can trade Sunday at 5 p.m. Central, Sunday 5 p.m. Central to Friday 4 p.m. I think that's 4 p.m. Eastern, because I'd be thinking of my, or maybe I'm thinking about my stocks. So say 5 p.m. Eastern to 5 p.m. Friday, 5 p.m. Eastern. I'm thinking Central Standard Time. But there are different times where there are different banking sessions, okay? And so if you look here, most of the money that is made is actually made in the London, New York session. And you like to look at sessions that are overlapping. You know, so if you look at the London session, you're looking at 4 a.m. and you see 12 there. And you see how the New York session opens at 9 a.m., which is really 8 a.m. Central Time. But there's usually extra money there too. Now, what I have found with currencies is that the best time to make money is 9 a.m. to 11 a.m. Eastern, which is 8 a.m. to 10 a.m. Central. And when I say the best time, I mean that's when the highest volume is available, because I only trade when there is a lot of volume, which means there's a lot of money in the system. I'm not, again, it's available 23 hours a day, but I only trade at money times. And then you're gonna find a lot of money between 3 a.m. and 4 a.m. And so, and this is just currencies. So when I'm talking about currencies. So you either trading in the morning or you're trading in the middle of the night. And by the end of this presentation, you'll know exactly what I am trading and what times that I trade. Now there is 8 major country currencies. Now, like I said, every country has a currency, but there are 8 major players. And most of the trading involves these 8 countries. So the United States, their currency obviously is the US dollar. We have Europe, whose currency is called the euro. We have Great Britain, and their currency is called the pound. We have the Swiss franc. We have the Australian currency, which is the Australian dollar. We call it the Aussie. We have the Canadian currency, which is the dollar as well, but it's Canadian dollar. We have New Zealand, whose currency is the dollar also. And we have Japan's currency, which is the Japanese yen. Now, what you'll find is that 85% of all Forex trades include the USD. We strong, all right? So most currency trades that are happening is going to involve the United States dollar and obviously EUR USD, which is United States dollar, and the euro is a heavily traded currency pair. Now, like I said, every country has a currency. Now, what most people are trying to do is you're trying to pit one country currency versus another. And so even though there are tons of currency pairs that you can trade, I'm only going to talk about the top 7 major currency pairs. That is the EUR USD, the British pound and the USD, the USD and the Japanese yen, which is one of my favorites. Actually, EUR USD and the USD JPY is my favorites. Then there is the USD Swiss franc. There is the USD Canadian dollar. There's the Aussie and the US dollar. And then we have New Zealand and the US dollar. So this is the top 7 currency pairs. So just for training purposes, as you are learning, pick 1 or 2 of the currency pairs that you're going to use in in your training, you don't have to focus on all of them because we do not spend a lot of time trading currencies because there's bigger money in other places, okay? But again, 72 of all Forex volume is in these 7 major pairs. And then they have minor pairs, then they have exotics. I have them listed here, but I want you to focus on the top 7, in particular, EUR USD. Now, when it comes to currency pairs, you'll notice that there is one country symbol that is on the left-hand side, and you'll see another country symbol on the right-hand side. So the currency that's listed on the left-hand side is considered the base currency. So that means if you are getting ready to take a trade, it is based on what you think the euro is about to do. So if you think the euro is about to increase in value, then you're going to do a buy with the euro versus the USD. If you think the euro is going to go down, the price is going to go down, then you're going to be doing a sale based on EUR. Okay, USD is just a currency that we are pitting against it. Okay, so basically what you're doing is if you think the euro price is going to go up, you're going to buy the euro and you're going to sell the US dollar at the same time. And the differences in these prices, and as the prices move in the right direction based on where you thought the price could possibly go, is where your money is going to be made. Now, we are using Hugo's Way, and they have what they call a one-click panel, and it looks like this. So I put this in here, and I just want to break down what this, this order panel is really telling you. So basically at the beginning of the panel at the top on the left-hand side, you're going to see the currency pairs that you are trading. So obviously the EUR USD, you're going to see that, okay? Also, we have what on the left-hand side, we have a sale button, okay? This is actually also called the bid price. So this is the price if you wanted to sell or basically short the euro. So that means if you think that the price of the euro is about to go down, you are going to hit this sale button. This sale button means short. A lot of times people get confused because they think, well, how can I hit the sale button if I didn't buy it first? Remember, we don't have to own the currencies like a stock. We can just short the market if we think it's going to go down, and we buy the market if we think the price is going to go up. Okay, so again, the sale price is the bid price, the buy price is the ask price. Okay, now when it comes to the pips, I want you to look at the 4th digit after the decimal point. So if we look at, and this is for Hugo's Way, and this is for this asset classes. Now there are different asset classes where the digits may be different depending on the currencies that you are trading. But just for training purposes with the EUR USD, this is exactly how it's going to look, okay? So your PIP interest point is, again, the 4th digit after the decimal. So here's a decimal. So this one before it, that's just €1. Dot 1, 2, 3, 4. So we're starting in the 4th digit. Okay. So if you was to just look at this, the difference between the 5 and the 6 is what? It's 1. The small number you see in the upper right hand corner is called a pipette. And a pipette is just a fraction of a pip. Okay. And so the difference between this is 4. So the difference between the bid price and the ask price is basically the spread, okay? And so that's 1.4. And basically the best way to describe spreads is fees, okay? It's fees. Now, again, we are using the Hugo's Way trading platform. Even though they say you can start a live account with as little as $10, that is not what we're doing. If you're going to start a live account, it will be with 150, but you're not even, we're not even talking about live accounts right now because you got to learn how to trade. They have added another server because there was so many people on the Hugo's Way network that the network, the server was starting to slow down. And some people were starting to see some type of freezing in their systems. And so what Hugo's Way has done is they have added more servers. So many people who are opening up their Hugo's Way account now, you're going to be on different servers than the rest of us who started, let's say 6 months or a year ago, okay? You are allowed to hedge, which I absolutely love. And hedging basically means, let's say I think the price of a currency is about to go up. So I put in a buy. But let's say I really don't know. or it's starting to pull back some on me. I can put in a sale too. So I literally can have 2 positions open going in the opposite direction. A lot of brokers do not allow that. If you are in a sale, you in a sale. You can't have a sale and a buy open at the same time. So the fact that you are able to hedge in your accounts is absolutely awesome. You can leverage up to 100% of the money that you put in there to take trades. I think that it has some low commissions, and like they said, scalping is allowed. Now, when you're going through your Hugo's Way platform, let's say, for example, you decided to take a trade. When you take a trade, your position that you have open, and this is actually on your desktop, this is not looking at your mobile, this is looking at a desktop. If you hit a sale because you want to short a currency or you want to short an indice, okay? The first thing it's going to tell you is the type is basically telling you what position you went in. Did you do a sell or did you do a buy? Okay. Now, every time you buy a contract, what you're really buying is 100 contracts at one time. Okay. Your lot size, we're going to talk about that in another slide. So I'm not even going to talk about that right now, but it's going to list the lot size that you're trading at. There is the symbol, which the symbol, this is an indice, this can be your currency pair, what have you. You can set your price that you're getting to your trades at. You can set stop losses. You can stop take profits. And again, we'll talk a little bit more about that. It's also going to share with you the commissions that you are going to be charged. And this commission is your round trip price. So that a round trip means when you place a trade and when you close that trade is considered round trip, okay? When you see profit all the way over to the right-hand side, that is basically going to tell you whether or not you win or losing. You're either winning or losing on the profits, okay? So if it's negative, what does that mean? You're losing money on the trade. If it's positive, obviously you're making money. What I do love about the MetaTrader platform is that when you want to close your position, and when you close the position, that means you're ringing the cash register, either with a gain or with a loss. All you have to do is click the X. When you click the X, it will automatically close you out your position, okay? So I just want to share that part with you. Now, also, let's say, for example, I'm using this example, this is a trade that is entered, okay? What you're also going to see is a line that looks like this. It's going to tell your balance, okay? It's going to tell you your balance in your account. It's going to tell you what's available for you to do future trades. When you're in a trade, it's going to tell you what your margin requirement is, and it's going to tell you what your free margin is. Well, this is what I want you to understand. If you reach 70% of your free margin balance, you are going to get an alert. It is going to be a red line that's going to cross your screen to warn you that basically you are in risk of blowing your account. It's called a margin call. And so when you when you see that, once you hit 70%, they are going to automatically close your position. So if you down $1,700 because you was just hoping it was going to go back in your favor, once it hit that 70%, it's going to automatically close, and you're going to have to take that $1,700 loss. Okay, and so with proper risk management, that should not happen. And we don't leave our trades open in hopes that it gets better. You recognize that you're in the wrong trade and you close out and you wait for a perfect setup, because you will make your money back. Okay, now in the trade platform, and we'll talk more about this next week when we start talking about your MetaTrader setup and your chart. Anytime you click on an asset class, if you right click on an asset class, once you set up your charts, if you go down to specifications, it will give you all the specifications that is associated with any asset that you want to trade, whether it's an indice or it's a currency pair. Now, the reason why this is extremely important is at the bottom, you'll see something that's called swap long, swap short. Swap basically means anytime you hold a position open longer than a trade day. Okay, so when you hold your position open for longer than a trade day, what they're going to do is they're going to charge you interest. Okay, and so next to this commission at the top, you're going to see an amount in your swap. And the amount that you charge is based on the currency or the index that you are trading. So it's always important to be mindful. If you decide to leave a trade open, know how much you're going to be charged with a swap, because once you close, you're going to have to pay commissions and the swap fee. So that's just something important that I definitely wanted to mention. Okay, so let's talk about lot size, and basically how much you make per pip. So anytime that you are trading, you're able to set the lot size. And that's basically, you're going to be telling them pretty much how much money you want to make every time the price moves 1 pip in your right direction. Okay, now with Hugo's Way, you can kind of set up a global lot size, but you can have it locked in where you can basically say, anytime I trade, automatically put me at 0.01. And it doesn't matter what you trade, that's what it will be. Or you can manually change it at any time. So 0.01 is basically going to give you 10 cents per pip. Now, there are asset classes out there, like the indices, that pay you out a little bit more on your lot sizes. This is basic currency. Okay, so 0.01, you're going to get 10 cents per pip. 0.10, you're going to get $1 per pip. The $1 lot size is going to give you $10 per pip. The $10 lot size is going to give you $100 per pip. The 100 lot size is going to give you 1,000 per pip. Okay, so your lot size should really be based on how much money you're going to be putting into a live trade account, because I do see a lot of people, even in practice trades, because these are demo accounts, because this is fake money. I see you with dollar lot sizes, $2 lot sizes, $3 lot sizes, and you making really big money. Well, you're able to do that because you got fake money and you got a large sum of fake money. So you're able to possibly leave a trade open longer to go into your favor. Now, when you're trading live, that's not going to be the case. And when you trade live, if you only putting up $150 or $100 or $50 for that matter to go live, you should never be trading any more than 0.01 cents. Okay, that's it. So you should be getting 10 cents a pip. You grow your account, then you can always go up. Do not jump out there with $100 or even $5, and you're trading dollar pips, because at that point you're gambling. Because yes, you can make some big money, you can also lose it. And remember, that's live money. So once it's gone, it's gone. You're gonna have to replace that money. Okay. So if people ain't in my account and you ain't income shift them paychecks, you're gonna find yourself out the game because you ain't got no extra cash flow that's laying around. So it's important that even when you are practice trading, practice on realistic lot sizes. Because if you are trading high lot sizes, but then you open up your live account and you're only putting in $200, $300, $500, when you trade at these lower lots, you're going to be unimpressed. And so you're going to be unhappy with your results because you're used to grabbing 500, 600, 700, but your live account is only going to give you $5 and $10. And so you're not happy. And because of that, you'll start over trading because you're trying to get more money. And in the process of doing that, you're going to start losing money. Okay. So I want everybody to be realistic because you know you. Okay. This is not a fast, quick money fast. This is not a get rich quick. Yes, we win, but we win because we've been trading a long time. So again, do not compare what we're doing to what you're doing because it took time to get there. Okay. Now, when it comes to risk management, many in the financial industry, when it comes to hedging, do not risk any more than 2 to 5% of their account balance in any one trade. So for example, if you opened up your account with $1,000, you don't want to risk any more than $20 per trade. But let's say you jumped out there with the dollar lot size. So what does that mean? That means that you can't risk losing 2 pips. That's it. That's it. That's all. As soon as you lose $2, $20, you got to be out the trade. But if you're trading the 0.10 lot size, you can risk 20 pips. Okay, that's a little bit better. If you are trading the 0.01 lot size, now you can risk 200 pips. Okay, now you got some wiggle room to make some moves. Okay, so you got to be mindful of that. If you got $1,000 account and you decide I'm going to risk 5% of my account every time I take a trade. So when I take that one trade, I can only lose $50 on that trade. If I lose $50, I'm done. So when people lose big in their accounts, that lets me know you're not doing risk management. That means you're not setting up your stop loss. That means you're just not manually closing out your trade, right? So if your risk is $50 per trade, at the dollar lot size, you could lose 5 pips. That's your stop loss. At the 0.10, 50 pips. At 0.01, 500 pips. Okay? And so like I said, many times, the reason why you're blowing your account is you are trading on the wrong lot size. Because again, yes, you can make good money, but when you're wrong, you're going to lose it too. Now with Hugo's Way, we also get to have leverage in our accounts, and we get to leverage up to 500, 1 to 500. And you're going to set that up when you open up your accounts. So for example, if you put $1,000 in Hugo's Way, you get to trade with 1/500 leverage. That's equivalent to buying 500,000 in contracts. You're able to have 500,000 in contracts off $1,000. That's what's so amazing with this broker. Now, I just want to share with you just the simple basics, because next week we're going to go into market structure. We're going to go into resistance and support and trade strategy and all of that. But what many of you are going to be doing for homework is you're going to be setting up your system. You're going to be opening up your demo accounts and setting up your charts. I already have those videos already recorded. It's step by step on how to set up your charts and how to set up your charts on a mobile. So when you set up your chart, you're going to see green candles and you're going to see red candles. To keep it very simple, anytime you see a red candle, that means that price is going down. When you see green candles, that means the price is going up, okay? So let's say I am looking at this and I'm coming in right here. I'm right up here, and I have decided by looking at the candles and maybe my trade strategy, I think that the price of the euro is about to go up. And so if I think the price is going to go up, I'm going to go over to my one-click trader and I'm going to click this buy button. So when I click this buy button, it is going to put me into the trade. Okay, now I want you to be mindful. The difference between the sell price and the buy price is the spread. What you'll notice is that when they put you in the trade, you are automatically in the red. Why is that? Because you have to make enough money to cover the spread, and then you go into profit. So for example, the spread is 1.4. So when I got into this trade, let's say it was 1.1156. You're going to see a line that goes across your chart, and it's going to be a green line. When the candle crosses that green line, you have now covered the spread. As the candle continues to goes up is when you get into the money. Okay, so a lot of times people say, hey, I took a trade and I'm just automatically losing. I don't understand. Am I not getting in? No, you got to cover the spread. Once you cover the spread, you'll start getting in the money. If you took the perfect trade, perfect setup, you will get in the money. Okay, so again, from here all the way up is money. And depending on your lot size will determine how much money you made in that move from here to here. Let's say I looked at the markets. The markets did a push up. It pushed up, pulled back, pushed up. And I see this long wick at the top of this red candle. So obviously that's an indication that higher prices are being rejected. So in my mind, I think that the price is going to go down. Okay, now I don't do it that basic because I'm gonna give you a strategy, but I'm just saying. So what I'm going to do is, since I think the price is going to go down and I want to make money when the price go down, I'm going to go over to my one-click active trader and I'm going to click sell. And I'm clicking sell with the expectation that I'm going to see some more red candles, because red means the price is going what? It's going down. So when I hit sell, it put me in position right here. And then there's going to be a green line across the horizontal line across my chart. When my red candle crosses that line, I have now covered the spread and I am now in the money. And as the price goes down, it goes down, it goes down, I'm in the money. And then I close out my trade. Okay? So if the price was 1.1154, which is after the spread, and I closed at 1.1144 because this price is lower than this price, obviously, because I thought the price is going to go down. That's why I shorted. Depending on the lot size that you're trading will depend on how much money you make, okay? So remember that your pip value is after decimal places. So 54 minus 44 is 10 pips. That's what I picked up. I picked up 10 pips. So if I was trading at 0.10 lot size, I made $1. That's why people be frustrated. Oh, I only made $1, but guess what? $1 a day adds up, okay? Now, what if you were trading $1 lot size? Then you would have made $10 on that move. And if it was $5 lot size, you would have made $50 on that move. Now, there's 4 different types of Forex traders. Well, basically traders all over. It doesn't matter if you're trading Forex or if you were trading futures, stocks, it doesn't matter. 4 types of traders. Now, the first trader is what we call scalpers. And that's me. A scalper is somebody who gets in and gets out of the market. The target is 5 to 10 pips. Well, that's not really my target. I go all the way to resistance level. So we actually can pick up way more than 5 to 10 pips. We can pick up 20 pips, we can pick up 50 pips, we can pick up 100 pips, okay? But the scalp is for you to get in and out. We out of trades within minutes, okay? Usually I could pick up money in a 5-minute, 10-minute time period. 30 minutes is usually too long, okay? In and out. I am using 5-minute charts. So the strategy that you're going to learn is based on a 5-minute chart. We're scalping, in and out, grabbing money. The second type of trader is what they call a day trader. And these are people who are really trying to pick up 20 to 40 pips. Now, the great thing is as a scalper with my strategy, we end up picking 20 and 40 anyway, but we still consider ourselves scalpers because we ring our cash registers fast, okay? So as a day trader, your goal is 20 to 40 pips a day. You're usually trading off of higher time frames, which is a 15-minute. Some people trade off of an hourly. I necessarily wouldn't trade off a 4-hour if I'm only trying to grab 20, 40 pips, okay? But like I said, we grab 20, 40 pips off our 5-minute chart. The third type of trader is a swing trader. And that's somebody who's trying to catch 50 to 150 pips every time they trade. These are people who are literally probably holding their trades open for a couple of days, okay? A couple of days. They're trading off of the 1 hour and the 4 hour. The fourth type of trader is a position trader. That is somebody that when they trade, they are grabbing 500 to 1,000 pips every time they trade. These are people who are holding their trades open for weeks and months. Okay, they literally trading off of one pivot point to a next. Okay, many institutions, this is pretty much how they trade. Okay. And they're using daily and weekly charts. So these are the type of traders. You are going to pretty much transition between a scalper and a day trader, even though we can grab 100 pips too. Now, the pros of trading currencies, because I introduced you to the currency pairs. The pros of it is that you need a small amount of capital to get started, anywhere from $50 to $150. You have the ability to trade 6 days a week, 23 hours a day, and you can make money when the markets go up, go down. The con of just trading currency pairs is that at the 0.10 pip size, you're really getting pennies on a dollar. There are other asset classes that at the 0.10, you could be making $5 for every pip. Okay, even at a lower lot size. The spread, I noticed that the currencies, that the spreads can be wider than what I like to trade, and it takes longer for you to get in the money. And a con of trading currency pairs is that you really only got 2 times of the day to make money. Even though it's open 23 hours a day, majority of the money is in the morning or you are up in the middle of the night. Okay, so to me, that's still limited, especially if you're somebody who work a job and then you're trying to sleep and then they want you to get up in the middle of the night and trade. So you're gonna have all type of problems. Okay, so those are the pros and the cons. And so what I want to do real quick is to show you what I trade. Okay, I trade what I call the cake. That's what I trade. I trade what I call the cake. And that means that I only focus on indices. You know, people be out there trying to figure out which currency pair got this strength and what. No, keep it really, really simple. I trade the markets. That's all I trade for daily deposits, the overall market. So I trade the SPX 500 because I want to trade the S&P 500 index. I trade the US 30 because I want to trade the Dow Jones Industrial Average. I trade NAS 100 because I want to trade NASDAQ index. I want to trade whole markets. These markets are so liquid every day, all day. I also trade XAU USD, which is gold versus the dollar futures. And then on Saturdays or whenever my charts let me know there's an opportunity for me to make money, I will trade Bitcoin. BTC USD. So you can day trade Bitcoin. You don't even have to necessarily own Bitcoin. You can day trade it, right? And also on this Forex platform, there are a couple of stocks that I day trade using this platform. Okay. And so people, you can spend all the time you want trading currencies. I'm going to go where the money at and where I can make a lot of money in a short period of time. So as far as I'm concerned, this is the cake and the currencies is just the icing. All right. Now, where is the most money when you're trading indices? 7 a.m. to 9:30 a.m., you can find a whole lot of money. 2 p.m. to 3:15, you can find money. 5 p.m. to 6 p.m. is a short little window to grab some money right when the market's open in the after session. 9 p.m. to 10 p.m., you'll see some volume kick in. And 1 a.m. to 3 a.m., you're going to see money because that's the overseas market. So as you can see, you got 5 different times where there's money in the system versus with the currency pairs, you really only got 2. Okay, so this is what I trade. I like to look and keep up with the overall markets of the economy because it affects your stock portfolio and it allows you to hedge, right? So that's why I do it. And that's what, as y'all set up y'all charts, all your practice trades is going to be on indices, Bitcoin, and stocks, okay? So again, we're going to be doing the Dow Jones because it represents 30 of the world's largest companies. So we got Caterpillar in there, we got Boeing in there, we got Visa in there, we got Nike and McDonald's in there. So obviously when Boeing drops, it drops the whole Dow. And when you know that, guess what? You trade the index, all right? We have the S&P 500, which is 500 of the world's largest companies, $8.2 billion, okay, of some of these companies, a $24 trillion market cap. So you got your AbbVie in here, you got your T. Rowe Price in here, you got Abbott Labs up in here. You're going to see multiple companies across different indices. You got AT&T, you got Lowe's, which is in here, and I absolutely love it. We got the NASDAQ, which is my personal favorite. I trade NASDAQ all the time. As a new trader, I want my new traders, beginners, to focus on the NASDAQ and the S&P. As you increase your skills level, then you can go to the US 30. Because I know some people in the comments talk about US 30 is bad. Yeah, I know. Y'all make a whole bunch of money in there. But as beginners, I want you to start with NAS because NAS has more long days than they have pullbacks versus the other indexes. And it's a little bit easier for you to make some money. So again, it's 100 large cap companies that have is $9.8 trillion in this index. It is heavy in tech stocks. So when you hear people talk about the FANGs, like the Facebooks and the Apples and the Netflix and the Googles and all of that, they are in the NASDAQ, okay? So a lot of companies are getting ready to go into their earnings tonight, tomorrow, Friday, and a lot of these tech stocks, hey, if Microsoft hits the tech stocks, meaning NAS 100 is going to probably do a little bit of a push-up tomorrow, okay? So just be mindful of how everything works. That's why we watch financial channels and things like that, because we always want to know what's going on with the companies because these companies affect the indices. Bitcoin is available 24 hours a day. So it's available 24/7. You literally make money every day. Now, Bitcoin literally moves sideways for a while and then it do a breakup or a breakdown. You literally just have to wait for it. I do like it. It's one of the world's most traded cryptocurrencies. Again, you can use it to hedge because sometimes when the stock market is going down or the indices are going down, usually Bitcoin is going up. And so that is a way for you to hedge as well. Also, in the Hugo's way, there are a few stocks that you can day trade and you can trade them based on lot size. I think this is absolutely awesome. So instead of having to go into Ameritrade or going into Robinhood and trying to buy a full share of a stock, or even if you are in stash and doing a fractional share of stock, you can actually just use lot sizes and you can leverage without having to, really invest a lot of money. Okay. So one of my personal favorites is Tesla. Tesla. You can actually have your lot sizes. It could be 0.01, it could be 1.00, and you can trade Tesla. Tesla is going into their earnings. So yes, obviously I am looking to day trade Tesla, because you can literally day trade Tesla every day. Then there's Microsoft, there's Apple in here, there's Amazon, there's Facebook, there's Netflix, there's Boeing. If you wanted to do these stocks, I would count as far as volume, I would probably look at Tesla, Microsoft, Apple, and Amazon. Those would be the four that I would kind of look at if you ever wanted to do some day trading. You guys, you could do stock. So there are so many different ways that you can actually make money. Okay, and so as we wrap up this class, I had made this post on my page the other day, but it is so true. And it is the profit potential that is available to the person who is disciplined, the person who's willing to learn the trade strategy, the person that is willing to practice, the person that's willing to journal their results and learn from their mistakes. If you take this serious, okay, there's 250 trading days in an entire year. If you were to make $10 a day, you'll make an extra $2,500 for the year. Okay, that could be money that you're putting into your retirement account. That could be your Christmas fund. $10. If you are averaging $50 a day, you're going to have $12,500 by the end of the year. So a lot of times I see people say, I made some money, I made a little $50. Oh, I made this little $11. I want y'all to stop saying little. It ain't little, it's new. I want you to start saying I made $50 in new money. Because the only reason why you're saying little is you are comparing what you're doing to somebody else. Remember, you're running your race and you are learning. So from this day forward, I don't want to see no more, I made a little bit. All right? Don't do that. You made a lot. It's a lot of people that don't know how to make $50 from their phone. So yes, you made a lot. $50 a day is $12,500 in a year. $200 a day will make you $50,000 a year. For some people, they may be able to fire their boss. The average income in America is really about $40,000. A lot of us, depending on what states that you're in, you might be making high six figures. But for a majority of the people in America, you're talking 30%. You're talking 30%. Okay. Now, if you are like me, where you are trading at $1,000 a day, you are going to make $250,000. You are going to be a six-figure earner from trading. Okay, and so this is why I think the way that I think. I make my money is not depending on anything, nothing. No business, no recruits, no nothing. That money is icing on the cake, but I have the ability to turn on my computer and grab $1,000 a day. Okay, $25,000 a month is always the goal, right? Now, if you're making $2,000 a day, you're gonna make $500,000 by the end of the year. This again requires discipline. That's it. That's all. $278 a day put you in a six-figure earning class. In addition to your paycheck, in addition to your MyEcon income shift money, that's gonna give you another probably $12,000 or another $5,000 on top of that. In addition to the fact that you built a whole MyEcon team and you making residual money, that ain't even included in all this money. See, we get all the money on the table. We ain't got one source of income. We got 3, 4, 5 different sources of income. and that's what you do. Now, let's talk about Uncle Sam, okay? For many of you, for majority of the people that are in this class, you are in my econ, so you are in the best position ever. But there are also some clients that is in this class who purchased, course purchase, mentoring or something like that. Well, what I'm going to say to you is you need to understand the tax implications of being a day trader, okay? Now, as a day trader, there is a distinction between somebody who's a day trader and somebody who's just an investor. And basically, an investor is somebody who's not taking a lot of trades, but you are probably holding your positions for more than a year. If you are holding positions for longer than a year, then you are considered an investor. If you are holding positions for less than a year, you are considered short term, okay? We, as day traders, we are doing intraday trading. So for the most part, we're in and out of trades within 15 minutes every single day. We're not necessarily holding trades open. We might hold trades open on Friday with the hopes to make some quick money when the market's open on Sunday. But for the most part, we're in and out every single day, okay? And because of that, our short-term profits is going to be taxed at the ordinary income tax rate. Right? So what that means is you do not qualify for what you would normally call an investor capital gains, where their capital gains is taxed anywhere from 5% to 15%. We are short term. So we are taxed based on the tax rate of your paycheck, basically. Okay? So in order to get what they call you having a day trader business, you have to take a minimum of 5 trades every single day, 5 live trades every single day for them to even consider you a full-time trader. Now, if you do that, you are not taxed the self-employment tax. Most people who got home-based business, you making any type of money in your home-based business, or you got a brick and mortar business, you pay a self-employment tax, okay? If you're in my econ, you getting big 1099s like myself, you pay a self-employment tax, or you pay your taxes quarterly. Now, that self-employment tax is actually being used for Social Security and your Medicare. So if you look at your Social Security account, you should see your MyEcon 1099 profits there. It should be listed there, okay? Now, if you take 2 to 3 trades a day, you are considered a part-time trader. And as a part-time trader, you have to pay that self-employment tax. And the only way around that is you have to have a home-based business. You're gonna have to have a home-based business. That's the only way you can shield your profits. A lot of people like, oh, I'm gonna make all this money. I'm gonna make this money. It's undercover money. It's just free money. No, it ain't. It's not, okay? You're gonna have to keep your trading logs for documentation. So the great thing with Hugo's Way, you can literally do a search from one date to the next date, and you'll know all the trades that you have taken over a period of time. Now, your gains and losses are reported on Form 8949 and also included on the Schedule D. So basically, you'll be able to do itemized deductions. Here's the problem with itemized deductions. Most people, even if you got a mortgage and you got real estate taxes, because they doubled the standard deduction, I found that most households did not have enough itemized deductions to itemize. So you had to take the standard deduction, okay? Now, the workaround from that, like I said, is for those people who are in my econ, you learn the tax laws. And so you're able to put your business under your my econ business. And so you can write off expenses on your Schedule C, okay? So on your Schedule C, as a business owner, if you are in my account, and obviously if you're on my team, I already have a video that breaks down all the write-offs that anybody that have a home-based business have. You'll know everything you can write off, but you have all your expenses to shield your money, okay? If you bought a computer, if y'all bought new laptops so that you could trade, if you're using a Schedule C, you're able to write off 100. You'll be able to write off 100% of the cost because you'll qualify for a special depreciation. All right, your computers. If you got better internet access, if you bought you a desk or something, I don't know. If you buy education, you bought this class. Okay, you're paying for mentorship. Maybe you purchase indicators that help you trade or things like that. Those things are write-offs from a trading perspective, in addition to all the other business write-offs that you qualify for. All right. Now, at the end of the year, in particular, U.S. brokers will mail you out a 1099-B. And usually they'll send that out by January 31st, but there are some brokers, I know like Ameritrade and things like that, it'd be like February, it'd be in February by the time you get your 1099-B, okay? Now, international brokerage companies like we use with Hugo's Way is not required to report our profit or loss to the IRS because this is an international company. But they will provide an annual report statement. And you use that annual report statement for your income. Now, because they do not report to the IRS, there's always gonna be somebody like, well, you know what, if it ain't reported, then I ain't finna say nothing. One thing I'll always say to you, it ain't nothing you ever gonna get away from with the government. And especially when it comes to the IRS. And they're really finna start cracking down on the day trading and the cryptocurrencies. You already see when you file taxes, they ask you, did you buy or sell any cryptocurrencies? So now they're getting hipped up to the game, the international brokers, and they're gonna want you to report that income. You don't have to worry about that. Again, if you got a home-based business and you got these write-offs, you ain't gotta worry about that, okay? Now, as a day trader, you can write off up to 3,000 of any losses for the year. Okay, so if you lose some money, you can actually write that off on your taxes as well. All right, so let me show y'all what it looks like, especially for those people who are in my account. What y'all should really know this already. But let's say you're not in my account, you don't have a home-based business, you just wanted to be a Forex trader, right? And let's say at your job you make $80,000 a year, but you grab $25,000 out of the Forex market. So that means that your income is $105,000. Let's say you might have a mortgage and you might have real estate taxes, but when you added it up, it wasn't more than $18,000. So you got to take the standard deduction. So we're gonna take that standard deduction because you have kids, we got your head of household, right? Your taxable income is $87,000. That's what your taxable income is going to be. All right, so your tax rate is 24% because you made you some juicy money, right? Now, for those people that's in my econ, they made $80,000 at their job. They pulled out $25,000 in trading, but they got $30,000 in business write-offs. Plus, they got the standard deduction. So their income, taxable income, instead of being $87,000, it's only $57,000. And their tax rate dropped from 24% to 22%. And so that's just using, let's say, 30,000 expenses. Your expenses may be more. Your income may be less. But you literally are able to enjoy more of your money when you have a business tied to your income. So don't think for 1 second, I don't need a business, I'm just gonna trade Forex, you hustling backwards. Because the government gonna get more of your money than you able to enjoy. And for most people in Forex, you take the money, you spend it, you ain't even got the money set aside to pay the IRS at the end of the year. So I don't want people to be penny smart, but they dollar dumb. So protect your income. If you ain't got a business, get you a business. If you want a business, join my econ. All right? Keeping it simple. So your homework assignment is in our group. under files, you will see something that says set up your brokerage account. And I want y'all to keep it really, really simple when it comes to setting up the brokerage account. You're gonna go to hugosway.com. You're gonna scroll down to the bottom. You will see something that says MetaTrader 4. All I want you to do, y'all ain't even got to sign up for a demo account, nothing. Just go down to the bottom and download MetaTrader 4. When you download MetaTrader 4, let me see here, because I think y'all still can see me. All right. When you download MetaTrader 4, it's gonna look just like this. Y'all see this little face right here with the orange hair and the orange beard? That's going to be your MetaTrader 4. So when you download MetaTrader 4, you're going to have two files. You're going to see something that say MetaTrader 4, but you're not opening that. You're going to click on this, the Hugo's Way MetaTrader 4, this guy. When you double click this guy, it's going to open up your MetaTrader account. It is not going to look like this because you have to go through the instructions to learn how to set your charts up. But when you open it up, we're going to keep it real simple. When you open up Hugo's Way, you're going to go File, Open Account, Hugo's Way Demo 3, click Next, and you're going to click New Demo Account, click Next, and it's going to ask you for your information, name, email, phone number, your Hugo's Way account. You're going to deposit, you can do 10,000, you can do 5,000 or 10,000, okay? I used to tell people put a lot of money in there, fake money, but what all that did is made people gamble. Put a smaller amount in there, like I say, put 5,000 in there, and that way you can kind of see how fast you blow an account, because that'll let you know what your discipline is, and make sure that for your leverage, you are going to select 1 in 500. This is all you got to do, and click I agree, and then the next button is going to highlight, and then you're going to have you a live demo account. Okay, keep it real simple. Go to hugosway.com, scroll down to the bottom, select MetaTrader 4. It's going to install MetaTrader 4 on your computer. Double click on the man head, and like I said, File, Open an Account, Hugo's Way Demo, New Account, and just fill it out. And then you're done with having MetaTrader on your computer. And then the next step, under Files, you will see a video that says how to set up your charts in MetaTrader. And you're going to see a video that says how to set up your charts on your mobile device. That's all I need y'all to do. I need y'all to do your homework. Do your homework, do your homework. So that on Wednesday, you got your chart set up, and we go straight into training on what the markets are telling you, knowing the difference between the uptrend, downtrend, knowing when the markets are moving sideways, knowing when markets change its structure. And then I'm going to give you my trade strategy so that you know when to get in and take that trade and when to get out. So everybody's homework over this weekend, get y'all charts set up. Don't come in here Wednesday and y'all charts still ain't set up. Don't ask me no questions on Wednesday about no charts. Y'all got from now to next Wednesday. And if you have any issues, drop your questions in the group because we will help you as fast as possible, but get that homework done. Okay, you guys? So I'm going to drop the replay of this video in the group. So it'll be under Files. It'll be Kickoff Session. I'll replace the video that was there. And then get ready on Wednesday because y'all gonna need y'all pen, y'all gonna need y'all paper, because by next Wednesday, you'll have a trade strategy, and I wanna see some trades that next day. That's right, I'm putting y'all right in the fire because you only learn by getting in the fire. I see you, David. Yes, you only learn by getting in the fire. And I'm telling you, that's how I learned. Nobody taught me. You know, I bought a whole bunch of classes. I was trading, I was doing demos, then I was going live. Cost a whole lot of, but it was okay because I got a real nice My Econ check that I get every month. And My Econ just kept funding and kept funding. And then my boyfriend said, when you tired of donating, you're going to get some discipline and you're going to do right. And so I got disciplined, and then I started winning, and I stopped donating. And so everything that I'm teaching you guys is everything that I did. And if you follow me, you'll be making money just like me. All right, y'all? Okay. Good night. Good night, y'all. Good night. My next Forex class, I'm going to have some wine. I'm going to have some wine, but all right, y'all. Good night. And y'all get y'all charts open this weekend. Hey, Dolores. Hey, Michonne. Y'all, thanks for jumping on. Thanks for jumping on. Hey, Rachel. Hey, Edwin, I'm glad you here. About time you here, Edwin. It took you 5 years to get in a trading class. Quit messing around and come on a trade, Edwin. This don't make no sense. Okay, hey. All right, y'all. Hey, Victor. Hey, Johnny. Again, hey, Stephanie. Thanks for jumping on. And Robert, I see you. Y'all, hey, Andre and Alicia. Val. Good night, y'all. See y'all later. Good night, Robin. Good night.
Good night.